Okay, so Jordy, you came into the business at like what, 08 or 9?
It was actually the beginning of 2010.
Okay.
I did do, I was in the office for a summer while I was out at school, which was 09. So I kind of saw the just the recovery, initial part of the recovery from the financial crisis, but really didn't get going full time till early January 2010. And
Which was great timing. So I would like to review quickly the Bayfield experience with you. So your group has just sold one of its stable of companies to New Gold.
Yeah.
Bayfield, it's called.
Yeah.
And Jordan was there. I think when you had that Great Burns Block discovery in 2010, and everybody was making money. And what's been the experience of going from boom times to bust, and what did you learn through the process?
I was fortunate to get in during a boom, as we saw, and it was this incredible boom. I mean, it was one of the best bull markets. If you talk with people again that have been doing it for many decades, this was one of the better ones. That kind of recovery from the bottom up to 2010, 2011, and when I started, really my initial deal I was working on was Bayfield with Jim, and we would go out to Toronto and we'd market, we'd raise capital, we were traveling, we were doing a lot of work, we were on the road a lot for it. The experience for me, being young and impressionable, and it really kind of lit a fire under my belly in a good way, where I saw, like, really at the core of it, I saw the good side of this industry. I saw what you can do when you raise capital and you go and explore. You put the right ingredients together. You have the right team. You have the right management. A big thing, obviously, technical team. Bob Marvin was our geologist, great geologist. You have the right assets, the right projects. You have the right methodology. And you have the right structure, so on and so forth, right? You hear about this all the time, but it really shows. It showed me when you put the right ingredients together, and in that case we did have a much better market. But you have the right ingredients. It showed me how lucrative and how quickly you can create value and create wealth. I mean, there's very few other industries out there, sectors out there, where you can have that kind of a return in that short period of time.
Investors have forgotten that?
Yeah, I think so. You're now, we've seen it over the last 3-4 years now. Investors are losing or have lost sight of that. And as we're seeing, really the only people financing these early stage deals and projects are the ones that have seen the cycles and have the wisdom and the experience to know that it will turn around eventually.
How do you be a great junior mining CEO, do you think?
I think in this market in particular, you really need to be prudent with each dollar. Whether that's going towards the exploration, whether that's going towards the G&A, marketing, etc. Right now there's a lot of companies out there that are just trying to survive, right? And I think it's healthy what we're going through. There's too many issuers out there. You've heard this lots, and this has been an underpinning theme over the last couple of years. And I agree. I mean, it's basic supply demand. You have too much supply out there right now, and that's fixing itself, right? But you have to be, as a CEO, as a manager of these companies, you have to be. You're not going to be the jack of all trades. I don't pretend to be a geologist. My focus, my expertise is more on the market and finance side of things. But if you can find the best geologists, you can find the best technical guys, you can find the best team that you can surround yourself. I think that's probably one of the top criteria points, and be able to work with them and be able to have them work together in harmony. And that's tough to do, right? That's tough for a lot of relationship.
But the biggest
management.
job of a CEO is to find the money, right?
Right now, absolutely it is. Yeah, I mean, that's in our space, in the junior side of things, that is the biggest part. And we've been fortunate. Again, the group that I work with, we've been around for over 20 years, seen the good, the bad, and the ugly in these markets, and we've always been able to raise capital.
So where is money going to come from for the sector, do you figure?
Right now, it's coming from the high net worth individuals, the sophisticated investors that historically have been focused in the resource space, And I see that probably, again, depending on what type of a company, what type of a market cap you're looking at, but for the smaller cap companies, I think that's going to be the source of financing for a little bit here.
So you just passed the CFA level 3, so you're a CFA charter holder now?
I am,
Congratulations.
Yeah. Thank you.
So what was your hope in taking it? To have to better understand the buy side, or?
You know what? I get asked that a lot, and I think that investors going forward, I mean, a lot's changed in our industry in the last 20 or 30 years, as you know. I think the way investors do their due diligence, the way investors analyze and pick stocks is changing fundamentally. I really see value in being able to understand how this sector, how these investments play into a broader portfolio. You're not investors. They don't want to. You're not going to have 100% of your portfolio locked in on junior exploration companies. However, as an alternative investment, as an asset class in that, which is what I believe this is, there is a place for this. I mean, it's high risk, high return. So if you want access to an asset class that fits into your portfolio, that diversifies your portfolio, I want to be able to convey that, to the retail investor and to the the hedge fund manager, right? So so the CFA was really a channel for me to understand, how a portfolio manager thinks and the link and the talk, and be able to converse with them on a different level, not just do the elevator pitch, if you will. Right?
So Jordy, now that you've passed, I guess they say the hardest financial exams. They're behind you. You're a CFA. Do you think you can get your stock up now?
There was a. I didn't see much correlation there, but I hope so, right?
Yeah. So what's going on with Skyharbour, your company? It's
a
small uranium explorer, and where does it stand?
Skyharbour, that's needless to say, my main focus. I've dedicated really my life to it right now, and I'm going to see it through to the end. I'm a young guy. This is my first deal. I'm going to make sure it works out right. And, you go through really with Skyharbour, like what really excited me initially about getting involved and putting the deal together was uranium, was the sector that I wanted to get the company involved with. And, just some basic things that I saw that stood out to me. I mean, you've had a space, a subsector within the resource space that's been absolutely crippled by, black swan events. You had, the uranium bubble burst in 2007, and then you had the financial crisis, which was, globally, but nonetheless, uranium companies were caught up in that. And then you had, of course, everyone remembers Fukushima. So you've had a subsector that's been absolutely thrashed around, and as a result, unlike other commodities, there's a lot less uranium companies out there now than there was 7 years ago. And you've had really a bear market for the last 7 years. I mean, you had a little move up in 2009 through 2011 until Fukushima, and ironically enough, Fukushima marked the top of the resource space anyway, right? March in 2011. So, but nonetheless, you look at the uranium, the uranium spot price chart, and, it's really been in decline for 7 years, not 3 or 4 like we see in the other metals. And, we've seen oil obviously pull off, but really it's been getting beat up for a long period of time. So, I looked at that, and I looked at, you look at the average global cost of production out there, right? I mean, you're talking about, $50 to $60 per pound all-in cost. Yet you've had a spot price that's been trading between, call it, $30 and $40, right? You're trading at a significant discount to the average global cost of production. When I was initially putting the deal together, uranium stood out as a true contrarian bet, and really the entry point to me at the time made a lot of sense. And I knew, though, again, going back to time horizon, I knew it wasn't necessarily going to turn around overnight. But there was opportunities to put a deal together, bring in the team first and foremost, Rick Kazmersky, Tom Drolette, and obviously Jim Pettit's the chairman. Bring in the right experienced team, and then go and acquire the projects that we could get at pennies on the dollar. And and continue to build the company.
So Jordan, why should anybody follow Skyharbour now?
We're trading at a $2.5–3 million market cap right now. Right, we've assembled one of the largest and most prospective land packages in the basin to date. And if you look at historically, you look at what these projects, when there's discoveries made, what they're sold for. You look at Hathor, for example. You look at Patterson Lake South, what Alpha ended up selling 50% of the project for. These aren't 2x, 3x returns. These are 20x, 30x returns. They're multi-$100 million deals, and that's a function of it being in the basin, high-grade mineralization. But you're hunting in elephant country, which is, if you're doing exploration, make sure you're going after something big that's going to be worth something, even in a down market like we're in right now.
So, any last word?
All in with Skyharbour, again, we're building a vehicle that investors can go to if, one, they like the uranium space, they see upside there. Two, we've put there's three main value drivers, three main projects in the company: Way Lake, Man Lake, the Syndicate project. So we cover different target types. We cover more traditional unconformity style, and also your basement hosted targets outside of the basin proper. So we have diversity there. Certainly last but not least, the team we've assembled: Rick Kazmersky, Tom Drolet, who's a nuclear engineer. He's a keynote speaker at a lot of energy conferences. Very knowledgeable guy in the nuclear space and in the utility space as well. So I think we've put together the right ingredients for success. There's really two main catalysts. You have obviously a rising tide, a market that turns around, but we have no control over that. So the biggest thing for us is putting, again, like I said, the right ingredients in the pot here to give yourself, your investors, the best opportunity, the best shot of getting exposure to a discovery, which creates a lot of value, which generates huge returns for investors.